Hello. This is a retailer spree today. I have already examined Walmart, Costco, and Target, and right now I'm taking a look at Kohl's Corporation. It's down 11%. Again, sort of like a sympathy play to what has been going on today in the markets. They have been absolutely getting decimated, almost 5% down for the Nasdaq, 4% for the S&P. Look at the Dow Jones. Everybody is getting absolutely destroyed, with Target being down 29% today. But let's examine Kohl's and see what's going on with this company. And you will see that overall it's been down about 33% in the past year. If we take a look at the 5-year chart, you will notice of a company that has been going up and down quite significantly. And for their max chart, they have been having their slumps and then better days and then going up and down again, with a little bit of a ceiling at these levels here near 80, as you'll see. There's a little bit of a resistance in the price. But now it's going down and we are sitting at 43 bucks. Let's examine the financials. First of all, of course, all these retailers have been absolutely getting destroyed because of their reports due to inflation woes, of course. They have been having issues with increased prices, of course, the prices of oil and all that. And so they have been losing some money, and they have having, as the article points, disastrous earnings calls here. This is why they are down significantly, and pretty much the rest of the stock market today is absolutely getting destroyed. But what we need to be doing is examining companies individually and see whether they are interesting potential purchases amidst this kind of environment where everything is going down every day. So let's see what is happening. The P ratio of the company is sitting at 6.8, which I love to see. It used to be negative actually some time ago, recently even. Price to free cash flow 3.34, going down as well. And look at this, the company has been buying back shares like crazy here. So the float has gone down, outstanding shares down significantly at 128 million shares over here about. Total liabilities to free cash flow about where would like to see it, near 5 or so, a little bit elevated. 5-year revenue growth though has been going down, so less sales for the company, and 2021 has been a bad year for them, it looks like, in comparison. Net income growth has been increasing, free cash flow growth as well, and the 5-year total equity growth has been going down though, maybe because they have been buying shares like crazy, that could be the reason. And if we take a look at the debt to equity ratio, you will see that it is down over here, and the price to sales ratio is very low as well, very interesting to see. So compared to the revenue that the company is making, the price is pretty low as well. Net income margins that are low but better than the other discount stores that we have seen. And a dividend yield of 2.9% in the last 12 months, with a payout ratio very comfortable here, 10% and 18% in terms of their net income. But if we take a look at the dividends module here, you will see that their effective yield is 4.6 because the stock is down significantly. You will see that their latest dividend yield translates to 4.6 right now if you take a look at the price, while the last 12-month one has been 2.9. Very, very interesting and potentially lucrative one here, especially when the payout ratio is that low. I love to see that. So if you're buying today, you're getting 4.8 or something, 4.6, and a payout ratio of 10%, which is very nice here. I love to see that. Very cool. Okay, so let's examine the financial statements of the company, because this one already looks very interesting to me. 20 billion in revenue, which is about the same, so the revenue has been slacking. Hasn't been increasing pretty much in the last 5 years. That's concerning, of course. And the net income here, pretty much the same story. 800 million, 150 to 938. A very limited growth here in terms of net income. The balance sheet of the company is sitting at less than what it used to be, 4.6 billion here. 5.4 is the total equity, as you will see, in 2018, so it has been going down a little bit. The debt of the company has been going down as well, though, so that's interesting. They have been doing better in terms of debt. So I kind of like what I'm seeing here with the from the company, even though they are, though their equity has been decreasing. I like what they're doing with debt here. For example, they're paying back debt, and they were purchasing back shares as well. Another interesting thing to note. And the cash flow statement here, you will see that the net income of the company is laid out here. Of course, we knew about this one. But the net cash provided by operating activities, 2.2 billion here in the last year. And the investing activity is cash flow negative because the company has been investing mostly in capital expenditures here. And in terms of financing, they have been paying back debt, as we noticed, as we knew, and repurchasing common stock, of course. Very, very important. The company has been buying stock like crazy in the last year. Very nice. Paying a little bit of dividend as well, comfortably here. And the free cash flow from 1 billion to 1.6 billion, a little bit of an increase. Now, I'm very, very interested in examining the stock evaluation tool here. And I want to see what kind of price to pay for the stock, because I'm getting interested, and the problem is the revenue growth is very limited, very, very limited. So I'm actually gonna go 0, and then I'm going to go 0.5 and 1, even though the last year has been amazing for them. I'm not gonna stick to that. I'm gonna go very low, see what I'm getting out of this one, because I cannot rely on this figure. Now the net income margins 2, 3 and 4 is what makes sense, of course, and the free cash flow margins somewhere near 100. I'm gonna go, or 110 really, that they had many years. 90, 100 and 110, 13% for an annual return. And let's see what we're getting. I'm interested. Okay, what I would almost expect here. Looking at the current price, it looks like we're undervalued, and it's only our low estimates with a revenue percent of 0 for the next 5 years, basically staying at the exact same revenue, 19.43 billion. We are getting a price to pay of max price to pay of 36 bucks today, which is already very near our current price actually. And with a 0.5% revenue growth, then we're getting to 61, which is significantly more. And so imagine if the company does better in the next few years. It does like 3, 4, and 5. In this situation, we're going to get a significantly better projection result here. And as you'll see, our high is going to be at 109 here. Much, much more than our current price. And so this definitely would be a buy here, even our medium, of course. So I kind of like this company, to tell you the truth. And from the retailers that I have examined, this is the one that I like the most. Of course, there are things that are not great, the fact that the revenue hasn't been increasing, but the thing is, if the company is making better margins and good enough free cash flow, I don't really care if they keep or increase their top line, as long as they keep doing what they are doing. And so, if they are cheap especially, because they are also cheap and that matters a lot in my decision, then I like them even more. And so, based on what I've seen in the previous retailers, this is the one that I like the most so far, Kohl's. And frankly, I would think of potentially adding some to my portfolio. When compared to Target, Walmart, and Costco, this is definitely the one that gets my highest vote here, for sure. So thank you for watching the video. Let me know what you think about these retailers. Which one do you prefer yourself? Is it Kohl's? Is it another one? Target, Walmart? Which one? Leave a comment below and let me know. I'm interested. This is a situation where we need to talk about this. And thank you for watching the video. Leave a like and subscribe. And remember, you can become a patron and get access to this tool. You can find links in the description box below this video. And I'd love to see you around. We have a lot of people actually already using the tool, and I'm always making it better. Thank you for watching this video, and I'll see you soon. Bye bye, guys.